Welcome back. You're watching us here on Chartbusters. Let's talk about Cosmo first. The company posted a 121% rise in profit after tax on a year-on-year basis, led by an EBITDA jump of almost 50% as well. Pankaj Poddar, the Group CEO of the company, joining in to discuss the earnings further. Thanks a lot for joining in. It's been a strong start. You're off to the Flyers in the first quarter of this year. So the natural question that one asks is that what's your target for the entire year, at least on the revenue, volume, margin front?
Yeah, hi everyone. So on the revenue side, we feel that we have already done close to 690, and we feel we should be around 3,000 crores for this year. And as far as the EBITDA numbers are also concerned, things are looking good from here. So we have done around 12% EBITDA in this quarter, and we do expect that things should get better from the current quarter numbers.
How much better?
It's difficult to predict, but it should be better than the first quarter.
All right. Hi, Pankaj. Congratulations on a good showing in the past quarter. So good on you. Let's get a couple of numbers going. Could you tell us how much did injection molding contribute to revenues in the first quarter? And how do you see this number scale up?
So see, the Cosmo plastic, the rigid packaging business is new for us. It's hardly a few quarters old. Injection molding has just started in the last quarter. The run rate, we closed, I would say, June month at 3 crores, in July at 3.5 crores. So month on month, it's going up. And it will continue to grow because right now we are hardly 20-25% utilized. So as we move along, capacity utilization will get better.
Got it. What about specialty sales as a percentage of the volumes in quarter one? I think was around 69%. Where does this number head? Because that's what will help margins, right?
Absolutely. And this, I would say that last year was not great for us, especially because of whatever was going on in Europe and America. So those markets are recovering well. And, vis-a-vis last year, we have grown by 5% from 64 to 69. And in fact, July, we did even much better. We crossed 70. And we expect that by the year end, it should at least touch 75, if not more.
Okay. What about the smaller part of your business? You're saying you're looking at consolidation of Ziggly. What's the current run rate out there? Small, but tremendous potential.
Yes, so Ziggly, we have been consolidating in the last quarter, I would say. We have been able to now bring down our losses very significantly. We were operating at close to 3.7 crores monthly EBITDA loss, and we have now brought it down to 2.5 crores through taking a lot of rationalization in the measures. The other good thing is that the same store sales growth is growing at a very nice pace. We are growing close to 6 to 7% month over month when it comes to same store sales growth. So we expect that within this year, we should be close to doubling our retail revenue from 23 stores that we had opened till March. We're also in, opening more stores now. So you will start seeing more stores growing. Right now we are at 24. And by the year end, we expect that we should be close to 40 number when it comes to the entire Ziggly. The other thing that we are doing in Ziggly is that one side, we have put a lot of emphasis on the vet care practice now, where we are doing complicated surgeries. So vet care as a practice. So we are one company which is giving the entire ecosystem to the customer, whether it's grooming, it's vet care, as well as the products. Similarly, we've started launching a lot of private labels and signature range, which has been loved by the customers very nicely. Yeah.
So what is the average throughput per store, if you could give us a sense currently? You said that SSSG is about 6 to 7%, but if you just look at a per store sort of revenue, what is it right now?
Yeah, so at a GMV level, it's close to 11 lakhs.
11 lakhs per store. So by the end of this year with 40 stores, you should be closer to around 4 crore in terms of GMV, right? 4.5 crores.
Yeah.
The other thing that I wanted to know in the pet care business itself is that, a lot of large entrants are making their announcements. Yesterday itself, we had Godrej Consumer saying that they are eyeing the pet nutrition business. So you're just a retailer here, right? There's no competition from new entrants who would come into this space. Just wanted to understand your right to win.
Yeah, so right now there are, I would say from retailer perspective, there are 3 players. And again, omni-channel, I would say we are the right fit because we are the only company which is offering complete ecosystem, both digitally and in retail space. And that way we feel our model is very strong, and we continue to grow very nicely month over month. So whether it's our online, where we are very focused on making sure that we only sell high margin products so that it can become a profitable business for us in the times to come. And similarly, in the retail space where we are focusing on the right areas, and we feel that our service mix could go as high as 55 to 60% in the times to come. We are already hovering at 45%, and services are actually growing faster for us, so we should be doing well there.
And the demerger happens when? At 100 stores or at 150?
Difficult to give any date at this stage. Definitely, we have to do the demerger. We have already set up a new legal entity, which is Ziggly Vet Ventures Private Limited. We made the announcement a few months back for that. But demerger will take some time. We have to decide on the right time, but it's not going to be too long. It should be within the next couple of years.
Okay, all right, Pankaj, appreciate you joining in, sounding reasonably optimistic about prospects of business. We'll hold you to these numbers, wishing you a good day and looking forward to chatting up with you at the end of this quarter.